Hi, this is Ogechi Michael Abbey with Enterprise Express Tax Service. Today I am talking about the specific documents that you need in 2024 to prepare your tax documents. So let's get started. Obviously, the first thing that you need is your W 2. Your W 2 document is what's issued by your employer at the end of the year, and it pretty much specifies what you've earned from January 1st of the prior tax year or the prior year through December 31st. So what that means is we're now in January of 2024. Your W-2 that you need to prepare your tax returns this filing season would show how much you earned from January the 1st of 2023 through December the 31st of 2023. And typically, your W-2 will also show a breakdown, for instance, of taxes that was withheld. Not just your federal taxes, but also your state taxes as well. The W-2 is always indicative of whether you're withholding enough taxes or not. So usually when people come to see me at my office and I get to prepare their tax returns, the first thing I look at is the withholdings. The reason why is it gives me an instant picture of whether that person is withholding enough or if they are not withholding enough. And I'm usually able to say there and then, that, there is a possibility that you may be owing taxes because I can clearly see that they're not taking out enough federal withholdings or enough state withholdings. And the way to take care of this a lot of times is to recommend that the client goes back to their HR and make some adjustments to the W-4 form. And that's a form that I'll be talking about in another video because it's very important that we know how to fill out those forms. A lot of times people make errors on the W-4 forms. I'll give you an example. Some people sometimes make the error of claiming exempt status on the W-4 form or the state version of that form. In Maryland, it's called the MW-507. If you claim exempt status, what it means is that there's no taxes being taken out whatsoever. And you will get a rude awakening at the end of the tax year or at the beginning of the tax season because you're going to owe a lot of taxes. And so going back to the documents that you need, again, you need your W-2. That's number one. Um, if you are self-employed, contractor, or if you, for instance, work in the gig economy, maybe an Uber driver on the side, you will receive a 1099 form. In some cases, it could be several of different types. For instance, if you drive Uber on the side or full time, as the case may be, you will get a 1099K form. You will also get a 1099 NEC form. The 1099K pretty much shows how much you've earned on a monthly basis. The 1099 NEC shows what you earned, for instance, if you receive any bonuses during the year. But the reason why it's a 1099 is that no taxes are withheld during the tax year with 1099. So you are solely responsible for paying taxes on that income. And that income is going to be taxed as self-employed income. So it's going to be taxed at a different tax rate than your normal income would be taxed at. So we talked about the W-2, we've talked about the 1099s. There are different kinds of 1099s, by the way. So you will also receive a 1099. Let's say during the tax year, you had to withdraw some money from your retirement account, from your 401k account. And, for whatever reason, there's several reasons why you could, that you would receive what's called a 1099R, a 1099R. And what the 1099R shows is how much was taken out from either a retirement, a pension account, or if you are retired. I see a lot of my clients who get paid with a 1099R as a pension, retirement income, or just a plain retirement income. And so the 1099-R is what you would receive for that. Now, some 1099-Rs do have taxes taken out, and some do not have taxes taken out. I'm not going to go into a deep dive on the 1099-R right now because there are several different scenarios that require quite a lot of explanation with the 1099-Rs. And it all depends on what your circumstance is. The different classifications with which the 1099-R can be classified, whereby you will not be liable for taxes. You will also be issued a 1099-R if you rolled over retirement income from one account to another. So let's say you changed jobs and you signed up with a new retirement account at the new job. Logically, what you'd be looking to do is move the retirement funds from the old job to the retirement account in the new job. The way that can be done is called a rollover from one retirement account to another. Now, there are different scenarios in which this can take place, and sometimes it can get quite complicated because if, for instance, you decide to take the retirement income from the old account and cash it out and then deposit it in a new account, that can a lot of times create complications because you may, for instance, get taxed by doing that. So the best way to usually do that is what's called a rollover. And all you have to do is complete some forms, submit to your old retirement account provider, and then they will process that old retirement account and roll over those funds into the new retirement account. And that way it's just a simple rollover. However, you will probably receive a 1099, and you will be able to present those documents to your tax preparer, and then he or she or they can go ahead and process it as it's provided. All right. So we've talked about the W-2. We've talked about the different couple of different types of 1099s. There's some other kinds of 1099s, but I just wanted to cover the ones that most people come across. Okay. There is also 1098 interest statements. These are statements that your bank, for instance, let's say you have a savings account in a bank and you have some money in there that is earning interest. The bank or whoever is servicing that account has to send you a summary of how much interest that you earned during the tax year. And that's usually sent in the form of a 1098. The 1098 interest income is taxable income. And the reason why it's sent to you is because whoever services that account sends a copy to the IRS, and they also have to send you a copy as well. And by the way, every document that we have discussed here, every earnings document, be it the W-2, the 1099, or even the 1098 that we're discussing now, copies of those documents are sent to the IRS. And the reason why that happens is pretty obvious. The IRS has to have a record of how much everyone earns. That's the only way that they can assess taxes on everyone. And so, those copies are sent to the IRS and a copy is sent to you. And what happens is that the IRS at a certain point in time starts comparing what you sent in with what they have on their system. And after they've done the comparison, if everything matches, then it's all good. Uh, Sometimes what tends to happen is people forget that they took a job at some odd place, and they did not receive the earnings end of year earnings document, and thus were unable to provide it to their tax preparer. And after a while, the IRS will send a letter saying, "Hey, we noticed that we have a record of this employer that paid you money, but we do not have a record of you providing that information to us." And the IRS is able to assess you penalties and fines for not providing them with the correct information at the time it's meant to be provided. So do watch out for that. That's why I advise people to take their time and make sure that they can check and see everywhere that they worked and that they have all that documentation. Now, if for some reason you did not or were not able to provide all the information or you forgot, because these things happen, and you do get a letter from the IRS, you are able to communicate with the IRS and send in that information, or you can also do what's called an amended return. So you are amending the original return to show that you have that original information and you're sending it into the IRS. Now, the IRS still has the capability to fine you and penalize you. So the fact that you do an amended return or that you eventually send in the information does not stop the IRS from penalizing you for not sending in that information at the time it was supposed to be sent in. So that's something that you definitely want to watch out for. All right, so we talked about the 1098 interest statements. There's also the 1098 mortgage statement. Now, interest that's paid on a mortgage is to a certain extent tax deductible, to a certain extent. And I'll clarify that when President Trump modified the tax system back in 2017, 2018, mortgage interest was modified to the extent that not everybody qualified for the mortgage interest deduction. Some people still do. It's a little bit complicated to get into here, but I'm just going to say that certain, up to a certain extent, mortgage interest is a deductible expense that you can put on your taxes, usually on your Schedule A. And so you will get a mortgage interest statement from your bank or from your mortgage issuer, and that's something that you ought to provide to your tax preparer. The mortgage interest statement, which is called the 1098, usually has how much you paid in mortgage interest. It shows what the balance of the mortgage is. It also shows if you paid any PMI, private mortgage interest, as well. And it sometimes will show what you paid in property taxes to the county that you live in. Property taxes are a deductible expense as well. So certainly that 1098 document is something that you definitely want to make sure that you give to your tax preparer. So we've talked about the W-2. We've talked about several kinds and types of 1099s. We've talked about at least two types of 1098s. There is one other 1098. If you have been paying student loans and you earn under a certain amount, there is a possibility that you could get a deduction for paying student loan interest, in which case you may receive uh, again a 1098 that represents how much you paid for student loan interest as well. So that's another form of 1098. One last form, 1098, one last type of 1098 that I'm also going to talk about is which you or your dependent, for instance, if you're a student and you have paid school fees over the course of the prior tax year, it's quite possible that your school will give you a Form 1098T. The reason why this is important is that school fees paid um, to schools for tuition um, do earn you a tax credit. Okay, and the only way that you can get that credit is if you furnish or give the Form 1098T to your tax professional so that they can input that information in your tax forms, and then you may be able to get that education credit. So the 1098-T again is another important form. So if you have been in school, or if your child has been in school, or your dependent has been in school, then make sure that you get them to download the 1098-T, and that's another form that you would need to provide to your tax professional. Uh, the last thing that I'm going to talk about, obviously, there are all kinds of different forms, and it will be an exhaustive process if we go through everything. But the last thing I'm going to talk about is if you are someone who has investments or brokerage accounts, and you should receive documentation from your brokerage account showing the activities or the brokerage activities. For instance, if within the year they bought stock and they sold stocks and monies were made on the sales of those stocks, you're probably going to receive a form that's called a 1099 DIV or a 1099B. And what these forms do is they show the activity, the sale of stock, um, and the purchase of stock. It also shows the dates and times during the course of the tax year when these stocks were either bought or sold. And so that's going to play an important part because this monies earned on the sales of those stocks are also um, considered taxable income. And so be sure if you know that have a brokerage account, or you think you've had enough activity during the course of the tax year, then you definitely want to look out for either of those forms from your brokerage provider. And the form that you're looking for are either a 1099 DIV or a 1099B. And sometimes it could be some other kind of form, but whatever it is, once you get that package from your broker, make sure that you provide that package to your tax professional so that they can take a look at it and then decide what's necessary to use for your tax preparation. So I know we've gone through a pretty exhaustive list here. The reason why I'm taking my time is many times I get calls from my clients and even prospective clients, and they're saying, "Well, what do I need to bring?" And so we have a list in our office which shows the different types of tax documents that are needed. But again, sometimes there are things that are what I call outliers. For instance, if you bought and sold a property during the course of the tax year, there is a possibility that you may owe taxes. Who knows? The law now states that if you are single and you sold a property and you earned over $250,000 in profits, that's after the sale, but if you walked away with above $250,000, then there's a possibility that you may owe taxes. But again, there are caveats there. There are some circumstances, even within that, in which you may not owe taxes. All right. So I just pulled out one of those scenarios. So if you did buy and sell a property during the course of the prior tax year, I would suggest that you furnish all that information, usually the closing documents, to your tax preparer, and they can take a look at it and let you know if there's any need to input any of that information into your tax preparation. Now, guys, this is why a meeting with your tax professional prior to the start of the tax season is extremely important. I always recommend this. Take the time, discuss with your tax professional what's gone on in the prior year, and then they can sort of start preparing you to get ready for certain instances based on the circumstances where they may need more information. For instance, I've recently had instances where I've had to have my clients go back to the title company to get more information so we can determine what their tax status is with regards to the sale of a home or the sale of an investment home. And so this is why that's extremely important. So again, I must stress, do take the time to get together with your tax professional so that they can review what's gone on the prior year, and then make the necessary adjustments or decisions. All right. So I think we've pretty much covered the basics of the documents that you need for your tax preparation for the 2024 tax year. Um, well, there may be one more thing. So before I close, let's cover this. If you are self-employed, obviously, if you run a business, then you need to have all your receipts and any documents that pertain to the running of the business in terms of expenses. But uh, if you are self-employed and you're on the gig economy. I stress the gig economy because a lot of people these days are doing what we call side hustles. So they're either driving Uber on the side, or they're teaching on the side, or they're doing one or two other things on the side where they're getting paid with 1099s. You want to create some kind of a system where you have a log of your expenses. The best way to do this, and this is my recommendation, is to use one card, one debit or one credit card. And that way, at the end of the year, what you could do is just print out the statements for each month and then present those to your tax professional or your tax preparer. And that's an easy way for them to prepare your taxes for you. So once again, if you're self-employed, you're in the gig economy, you may still be working and still have something on the side. One easy way to get your expenses or your expense report is to use one card for all your expenses. Also, because mileage is a deductible expense, and it's a pretty heavy one at that, you also want to find a way to record your mileage. It's gotten much, much more easier to do this because now you can do it electronically. There's so many apps out there that will record and distinguish between your business mileage and your personal mileage. And so I would definitely recommend that you do that. And that way, you have a way of recording how many miles that you've done, and those, or how much mileage can be allocated to for business purposes as well. Okay. Also keep track of your utilities because these days, if you are self-employed or you have a side gig, you do have the ability to use a portion of your home, your household where you're renting, I believe up to 300 square foot for business purposes. And so you want to keep track of whatever expenses that you have. These could be utilities, your phone bills, things like that. And then when you sit down with your tax professional, they can determine what is relevant and what can be deducted and what cannot be deducted. I'm being a bit general here because every situation is unique, and I can't specify here that this is this or that's that, but I can give you a general look of what's required. So I hope this helps. I know it's a little bit long, but I felt that I needed to explain just to make sure that everybody understood. Once again, my name is Michael Ogechi. My tax practice is in Bowie, Maryland. We do taxes in all states across the nation. We are also a fully remote capable office. So if you do decide to send in your documents to us, we have a secure portal where you can upload your documents, and we can go ahead and take care of your taxes. But I hope this information that I've given you today helps. They're important documents that you need for 2024 to file your taxes successfully, and I've gone through at least the majority of them. And if you have any questions, or if you have any documents that have come in that you're not quite sure of, feel free to send me a message, and I'll definitely be able to lend my expertise to know what that document is, whether you need it or not. And if we don't have the answer, we'll make sure that we find out what the answer could be. Once again, it's Michael Ogechi Abby. Thanks, and have a wonderful day.